Good morning, everybody. It's Chris here from Serene Education with the 4 majors analysis up for the 2nd of May 2013. Morning, folks. Okay, let's have a look at the 4 majors with our FX8 Ultimate template. Starting with the Euro against US dollar on the daily. Okay, so what have we seen? Yesterday we saw some upside, and you can quite clearly see here trading above the 38.2, which is my long term, my weekly Fib retracement area. And you can see that my near term, my daily Fib retracement from the current high to the current low, you can see that the 50% line stopped price yesterday from moving any higher, and subsequently we saw price pulling back. And then this morning on the Asian session, we've seen a slight consolidation. Price is still trading above the 38. So as long as we see price intraday maintaining above this level over here, then we could potentially be seeing this is the pullback, and now we need to see the consolidation, and now we need to see the bullish engulfing candle bounce. If we don't see that and we see price breaking lower, this is going to constitute a nice shooting star at the top end of a slight trend here, move to the upside, and that's going to tell us we should be looking downside. So very, very important. The 38.2 intraday needs to stay as support. You can see previously we were above this area here not too long ago in April. Here again, you can quite clearly see the breakout, the pullback, and the continuation into the 50%. However, the failure to do so. You can see intraday, guys, we're seeing a lot of negative sentiment as we see the pullback, which concurs with what's happening right now with price. MACD has just dropped below the 0. Okay, this candle hasn't closed yet, so very, very important. We've got to wait for the candle to close. Just refresh the screen. So on our 4 hour, we have another 94 minutes, so an hour and a half still to go on this particular pair before it closes. So it'll be imperative to see the 4 hour candle close above here. So I'd look to see, or I'll wait, I'll bide my time to see what happens with the 4 hour candle, and then once I'll make my mind what happens in the next hour and a half, what's likely to do. So got to see a bullish engulfing candle here at the 38.2. We are going into Thursday. Thursday is the day before non-farm payroll. So we have a lot of news out for the European sector. Spanish manufacturing PMI. We have the Italian manufacturing PMI. We also have the European manufacturing PMI. We also have the minimum bid rate. We have interest rates announcements for the Eurozone today. So they are currently at 0.75. They're expecting a forecast of 0.5. So a decrease in the interest rate. So it'll be interesting if they actually go ahead with that, the ECB. And then this afternoon we have the ECB press conference. Important one to listen out to. Draghi will probably be talking on that. And then we have the US news announcements this afternoon with trade balance figures. Then we have the unemployment claims. This is before the non-farm payroll employment claims tomorrow. So, and then we have the prelim non-farm productivity quarter-on-quarter figures. So there's a lot of news this afternoon, this morning, leading into this afternoon. So here, paramount that price now found support above 38.2. The moment you see a bearish engulfing candle close below this, then we should be looking near term to the downside and targeting the 38.2 here, this red line. Get below that, then we should be targeting all back towards this 1300 here, which is back to the institution on an intraday for this particular pair. So be vigilant, be patient. We are trading into a current support and resistance level here. Rather bide your time and see if we actually get a clear signal from the market. Either if this to be clear support, then we need to see a bullish engulfing 4 hour here or an hourly consolidation. If we don't see that, then we should be looking further to the downside. On to Sterling. Sterling, on the daily, what have we had? Mixed results, a lot of negativity, but also positive. Our moving averages pretty much still below price on our intraday time frame, telling us we should still be seeing support by the daily. That'll be our ultimate target to the upside if we get a break above this current consolidation area here at the 50% line. You can see the past couple of days being very hesitant as we headed into this area. We saw the breakup, the pullback, the consolidation, and then the buying up. However, now we've seen consolidation here at this near term. To see further upside, remember this price is making swing highs. RMO is above now. Our MACD is above. We do need to see this area at the 1559 area being broken. We'll make that, and then clearly above that, and then we'll target the institution moving average above. And from there to there, you're looking at 180 odd pips of worth of target to the upside. But we clearly need to see price trading and trading above that level. Failure to do so, then we could see, you could see over here, for example, we're seeing a bit of negative sentiment through our smaller time frames, and our R squared is complementing that. So as it stands at the moment now, we could be looking for pullbacks, and if we see any shorting opportunities, then we could be looking back towards the 38.2 here, which is, if I'm not mistaken, let's have a look. From where price is trading right now, there's 120 odd pips to the downside there. However, on our daily, everything's looking positive. It's got a 4-hour time frame. You can see the consolidation. The RMO is still moving high as we've headed higher into this area, but we're clearly into this resistance level now, and you can see the MACD hasn't been with us. Okay, the initial move to the upside, MACD was very strong and the RMO was strong, and we had that breakout. Here, RMO is looking positive trend-wise, but the MACD is just not with us at the moment. Okay, so RMO is still above and the MACD is below the 0 line, so we don't have the sentiment with us at the moment now, and we want to have that with us. Okay, so it's important that we have the MACD. The moment the MACD goes green again, we should be above the 50% line. R squared should still be okay, and then we can pull the trigger. Hourly, you can quite clearly see RMO is moving back to the 0 line. MACD is flat. Okay, so consolidation, you can quite clearly see we are consolidating. You can see price where it's trading right now is at a prior support and resistance level high, a consolidation high. So if you want to worry, just to bear witness, just wait and see what happens on an hourly. Look for price to consolidate here. We've got another 29 minutes for this candle to close. Have a look and see what happens at this level over here. We get a consolidation candle, a bullish engulfing candle. MACD starts to make lower histograms and the RMO makes a higher one here, then we should be looking back to see price making a reattempt of these highs here at 50%, which is, if you look at where price is trading now, I'd say anything above the 20% or 20 period moving average, you're looking at another 30 odd pips to the upside. So quick rally to the upside nonetheless. US dollar Swiss franc, let's have a look at this one. Price been moving quite aggressively up from the support over here, moving higher, but now you can quite clearly see two resistance levels over here and price has reverted to the downside. Where this tweezer bottom recently at this Fib retracement area had the 23.6. We saw a tweezer bottom, price built on that, however failed to really get to those current highs. The previous highs we had just recently, and subsequently price has fallen back and is now testing the same area we've just come from. It's imperative, if this is to be negative, because we haven't made any higher highs, we're making lower swings, then we need to see price actually finding resistance at the underside of this 23.6 in order for price to drop. You can see on our daily the RMO is just going over the 0 line. MACD is trading below the 0 line, so looking negative. We have a red arrow, red candle. However, look at intraday. We're seeing a lot of buying sentiment, but the R squared is not really complementing it. So mixed signals at the moment now. We are seeing selling. We want to see price. It's trading into this area. So we want one or two things. We're either going to see another bounce, which happened just recently, and you can see prices spend more time above here since February, and then a reattempt back up to these current highs we've seen recently, or we're going to see a break lower. So the US dollar Swiss franc, because we're going into non-farm payroll figures, we're going to see some news this afternoon in particular which might favor either of these pairs, and then tomorrow we could see a decisive move with this week. So rather, in my eyes, look at the US dollar Swiss franc, wait and be patient for this one, because if something happens today and tomorrow, it could lead us into finding a genuine trade for the new week next. So for me, I'm going to rather stand aside. I said the same thing yesterday. We're trading to this area and price just did nothing. Not worth it. Not worth the risk involved. Rather stand aside. Rather get a genuine sentiment from a candle from the market, and then we'll trade that. So I'm going to give this back to the market. The US dollar Swiss franc can have this day and tomorrow, because I want to see a clear direction from the market, and when I see that, then I'll know exactly where I need to be going. Last but not least, the US dollar Japanese yen. This particular pair have been trading highs every single month without fail. However, near term we've seen resistance. Since September, October of last year, we've seen price really running to the upside. You can see our long-term sentiment has been very, very positive. However, because we've seen consolidation here near term, you can see a lot of negativity intraday to actually back that up. You can see a lot of our days in particular, because we've just been going nowhere. Our days in particular have been negative across the board. RMO is just above the 0 lines, but we've seen a lot as prices pushed up. We can see the RMO is clearly fallen to the downside. So still maintaining above. The trend is still looking strong because we're still above the 0 line, but just MACD is clearly fallen over because it's clearly showing us that sentiment is looking negative. Our MACD line, however, this low over here is an all-time low if you look at the consolidation just recently, and it's one to note, the current, it's now testing. If I can just zoom just to show you, price is now at a level where price was clearly a resistance level in the past and a support near term. So we are at a support area here. You can see a lot of indecision on the candles, very short wicks. Okay, so if this is to be genuine negative here in the short term, we do need to break below the 50% line, as well as this current support and resistance level here at the 96.75 mark. Failure to do so, then we could see price building here. The momentum will start to build, and then we could target back up towards a 50% line going into the next week. Failure to see support over here and a break lower would constitute that we should be looking for further lows, and then we should be heading back towards this price consolidation long-term, monthly, weekly February retracement area at the 38.2, which would be just short of the 93.88 or the 9400, depending on which chart you're looking at. So very, very important. We here again, like the US dollar Swiss franc, we are trading at a major support and resistance level. It's far better just to bide your time, wait for the confirmation. Let's have a look at the 4-hour time frame. See a lot of indecision on here, a lot of hesitation. Price is still making lower swings, so the sentiment's negative intraday, and that's complemented with the arrows. Our MACD, however, is starting to get above the zero line. Okay, so suddenly there's a bit of buying sentiment coming through, and that just concurs because we are moving sideways. The RMO, however, is flat, so we are seeing sentiment starting to pause now, consolidate. You can see we're not making lower lows, and the institution is below us on the 4-hour. So we've got to be very, very aware of that. If we start seeing a major support being forged over here on our intraday time frames, then we could start seeing buying sentiment coming through. If we start seeing buying coming through, then we should be looking for the upside. And if we do see that, then we could target the price swings. So any support over here, then we could target this swing over here from where price is consolidating. So you're looking at 65 pips to that level alone. And from this current swing over here back up towards the current highs, you're looking at another 135 pips or so. So there's momentum to the upside, but we want to see that. At the moment now, we're still in a lower swing on our 4-hour. We have a major support below us though. Okay, so if we don't see this supporting price and we see a break lower, ideally on a 4-hour candle, then we should start, the warning signal should be out saying we should be looking for lower lows. Quite clearly we had a support here and a support even further back. So a bullish engulfing or bearish engulfing candle here, above or below these 2 points over here would be my decision. So I'm not going to trade this until I get a clear directional candle, because we are trading to a major support on our daily. I don't want to be part of the speculation group. I'd rather let price tell me what she wants to do, and then I will trade according to the outcome. So patience is a virtue. Wait for a break, a nice 4-hour candle close lower than the support and resistance area here, or a nice break and close higher above the support and resistance level here, and I know exactly what I need to do going forward. Okay guys, so that's it for today. A lot of news out today. Please be vigilant. Please have a look at the fundamental news announcements. There's a lot for the European sector. PMI manufacturing results throughout the European zone. It doesn't really have a lot of sentiment, but there is one for the German market, and because the Germans are the industrial power, the production powerhouse of Europe, it'll be interesting to see how they're faring. This afternoon we also have the European interest rates announcements. They're expecting for interest rates to be dropped by 0.25%. It'll be interesting if that happens. If we do see that, then we could see price moving quite volatility in one direction or not. So very, very important. Rather stay on the side, wait for that sentiment move, because that could play or set us up for next week's trading. Okay, tomorrow's non-farm payroll. There again, we're going to have a further lot of speculativeness prior to the non-farm payroll figures coming out. So there's a lot of news over the next couple of days. It's far better just to rather stand aside, let the price do its thing, and then we can pick up the bits and hopefully have some clear direction going into Monday, Tuesday of next week. Okay, so back up for sound money management if you are trading these particular templates, and just enjoy it. Keep it simple. Mechanical is the best approach. Here again, you can quite clearly see my approach to this. Because I'm trading to a major support and resistance level on the US dollar, Japanese yen, I'm very mechanical in my approach. I'm going to set alert above the current swing low, and I'm going to set alert below the current support. Give you my signal, and then I'll trade accordingly. Okay, so that's it. Have a fantastic trading day. I'll see you tomorrow morning. Until then, you guys trade Serene.